All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here today. Let's take a look and see how we're doing coming up on the noon hour Central Time. What has this market got in store for us? Well, we can bring the corn board up and see that it's got probably not a lot going on, and it's about 4.80 is the last price. That's up a half cent. So we've kind of backed off a penny. We're a half cent off the low of the day, but, there's not even a 5 cent range, right? So it's just under 5 cents. That board's doing nothing. I don't want to make too much out of it and spend too much time on it. But right now, I'll just tell you, March corn's trading at 4.80. Nothing going on. May and July are sharply unchanged. That one's out to lunch. Let's move over to see what we got going on in soybeans. That's that Jan price is up 6 cents there, 13 and a half. That's where it was the last time we checked, too. So I can tell you that not a lot's happening there. We're about 6 cents off the highs, well, 9 cents off the lows. So we're in the middle of the range, 6 cents higher in the day. Jan beans, 13 and a half. All right. Let's move over to wheat. 7 3/4 cents higher there. That's Chicago wheat. March trades at 6.13, 6 cents from 6.5 cents from the highs, and about 7 cents from the low. So come on, that's another one right in the middle of the range. 7 3/4 cents higher. 6.13 is last. Excuse me. All right, let's move on to the hard red in Kansas City. 1 3/4 cents higher there. That's March. 6.33 3/4 is last. I'm going to say that's 5.5 cents from the low and about 7.5 cents from the high. It's now 7 cents from the high, but that's going to be also in the middle of the range. So we've established the ranges today. We've kind of drifted back to the middle of them because there's really not a lot of stuff out there. We're kind of listless. We're 2 cents higher, though, in the Kansas City hard red, and that's March to 6.34. Spring wheat, Minneapolis, 3 3/4 cents higher there in that March contract. 7.17 1/4 is last. 3.5 cents off the lows of the day and about 7 cents from the highs, 7.5 cents from the highs. That'll give you an idea where we sit, but still, we're 3 3/4 cents better. It's quieting down now. 7.17 1/4 is last. That's the Minneapolis spring wheat and the March contract. Finally, let's get to the cotton, and that's down 26 points to 80.92, 15 points off the low of the day. All right, let's bring in Tommy Grisafi. He's with Advanced Trading, and he's back up in Fargo, North Dakota. Thanks for being on, Tommy. All right, what do you got for us? What's top of mind?
Just crazy day yesterday. Everyone wanted to talk about Argentina and what happened down there. I didn't really think that was the big story. The big story was going to be the Fed. Now, the Fed did a shocker. The Fed gave a gift. The Fed helped secure elections. Elections have effect. You see what happened in Argentina. You're going to see what's going to happen here. But the truth is, Scott, if you understand finance and you understand markets, we really had the integrity of the market hurt pretty bad when we look all the way back to SVB, that bank out of California that blew up. The Fed had their pedal on the gas, and when SVB blew up, multi-billion-dollar bank, there was enough cracks in that bridge that they didn't let people drive over it anymore, and they quietly started backing off. I can give you several reasons why we should be higher for longer. I'm not upset. Number one, I'm happy. If you're a farmer, every farmer out in America, right after they get done watching your show, should call their banker. Your banker can't tell you what's going on with interest rates and what it means to you, whether you're buying land, buying a tractor, or financing something. You need a new banker because these interest rates are moving incredibly quick, and the United States government just gave you a gift. There's a reason they gave you a gift. If you know, you know. If you don't, keep watching the show. Why are we talking about interest rates with, on a markets channel? Because it's everything. You used to be making 5 or spending 10. Knock it down now. You're either making 3.5 or spending 7.5 on interest. This was a big deal. Bad news for corn, wheat, and beans. In the end, if they are not having the inflationary trade on, what's the opposite of inflation? Deflation, my friend, or at least going sideways. So that's why you're seeing corn vol last Friday with 52-week lows, is because the grain markets look to be going nowhere quick. And that, in the end, if you think yesterday's news was bullish grains, deep down, it's not. Back to you, my friend.
Yeah, I mean, although we did see that sudden change in the Fed's expectations for interest rates with their dot plot, which that's a whole other thing I can't stand. But when you try to bring it back over to corn, wheat, and beans, yeah, there are some commodities that did benefit right away, 2 of them being oil and crude oil and gold. But really, what's that mean to the ones that we have to grow every year? Well, nothing really changed that much there. And unless you're right, unless we see some money flow back in, which we used to be the old inflation trade, which it just doesn't see I don't see that happening. It could struggle. And like you said, sideways trade, we'll see. But we've had some folks come on MDR and say that, maybe we should start protecting the downside. You can stay in the upside, but we got to make sure that we don't drift lower, because there could be a situation when you plug all these inputs in, you could see some of these prices tail off. But we're going to stay vigilant of that, and we're going to stay vigilant with you. We got to go away. We got to pay some bills. We're going to talk more livestock with Tommy Grisafi. He's in North Dakota, Fargo. We're going to come right back after this. All right, welcome back to Market Day Report. Why don't we jump right in and see what these livestock prices have in store for us? You wear a cow jacket all day long. You got to talk about cattle, right? Let's go to live cattle, and that's not been doing very much. It is nicely better, steady better, I suppose. If we go right to the Feb, that's up 92 cents to 168.15. And that's right in the middle of that range as well. April's up 82 cents to 171.77. So live cattle, I'm trying to put about $1 on the board across the board. All right, that's live cattle. Let's see about feeders. They were up over $2, and they still are around $2.50 to $3 across the board there. Jan's up $2.47 to $219.85, and that's about $1.60 off the lows. And we're ways off the highs, so we're in the middle of that range. March is up $2.75 to $220.60, and then finally, lean hogs, let's go there. Look at this, decent gains in the Feb, $3.75 there. That's good. 70.47 is last. That's a new high. I'll ring that new high bell when I ever get one. But $2.65 is the gain in April, right behind it to 77.02. Let's bring back in Tommy Grisafi. He's with Advanced Trading in Fargo, North Dakota. All right, Tommy, is it safe to buy cattle?
I like buying it 1 pound at a time at the grocery store as I need it. Do I want to go all in on cattle? I think you had a good opportunity to do that last week. Now, getting involved in these commodity markets on these days would not be advice. If you're saying as a speculator, is December 14th a good day to get involved? No. Should have had your year already. I will tell you this. I talked to a great hog producer in Central Illinois, and he said the amount of carnage in the hog industry is mind-boggling. He went through some people and places that went broke, and I had asked him, weren't you guys just killing it 2 years ago? I mean, just think of how fast you could have a boom-bust cycle like we did in these meats. Even though we were excited that interest rates have come down, they're still elevated compared to the last 10 or 15 years. The meats have some incredible headwinds coming on. Before you and I went on, they talked about the weather, that handsome devil who does the weather over there, and we're having above average temperatures in the plains in the Midwest. These, as the packers, go through these cattle, they're coming in heavier and they're getting more. We're having very little death loss. Some really great things happening for the cattle producer, but not maybe necessarily great in price. So great winter weather. The cattle are getting the tons on. They're gaining weight better because they're not sitting there shivering. Imagine you and I sitting outside all day in the cold, Scotty. We'd burn all that food we're eating. We wouldn't be gaining. And so the industry is tough. I love seeing the hogs up. I'm happy, but there is some serious problem in the hog industry. And I don't think the Fed's going to be able to save you. Back to you, my friend.
Yeah, well, Prop 12 kicks in Jan 1, so there's going to be some carnage there. There's going to be winners and losers in California and winners and losers outside of California. We'll have to wait and see, but I really appreciate you bringing all of that up.
Thank you.
Thank you very much. Tommy Grisafi, he's with Advanced Trading, great friend of the show, of MDR, and also a good friend of the Cow Guy Close. So.
Absolutely. Good stuff. Thank you so much, Scott.